And now, Alex, let's talk about some of these big private tech companies. SpaceX is worth $210 billion. OpenAI is worth more than $150 billion. And Stripe is worth over $65 billion and is kind of a sleeping giant. If Trump is president, do you think they will come to the public markets faster? Does it change how much it's worth? What does it do for these businesses that haven't been in the public market yet but look like they might be ready to jump in? Yes, I do believe that the markets will open earlier now that we know for sure what will happen in the White House. I agree with what Dan says. The M&A market is open for business. In addition to the IPOs that I think are going to happen anyway, we have a lot of friends who are very excited to start buying other businesses. This will help spread the money around. Okay, now I can have fun. You get to do what I get to do. Here, I get to mess around with the numbers. To begin, we will look at the first figure, which shows the S&P, actually the SPI, and the rise for the Trump trade. We'll show it right away. So you say this is what we need to watch. There's a bit of a gap here. What does this gap up here mean? That, I think, is our theme for the week. Keep an eye on the gaps from last week. A lot of people were positive on Wednesday, which made the market open very strongly and leave these gaps behind. We always keep an eye on the gaps because if the market, the SPI, or any other security quickly pulls back into that gap, it usually means the move has failed. So the gaps can show us how long the uptrend will last. For SPI in particular, it went up almost 5% last week, which was a great move up that was followed up by more good moves up right away. This means it has a good chance of keeping that gap. But it needs to keep that gap open if it wants to keep the breakout this week. So at least in the pre-market, there is a lot of excitement. We will have to wait and see if the technicals point us in the right way. Right now, I want to go somewhere else. It's fun, so I'm going to clear the charts again. Katie, I can see why you like this. Here's the VX chart. We will look at overbought and oversold situations from this point on, and then from this point on. I think the top line shows the overbought and the bottom line shows the oversold. What does that mean? What do these charts tell us? It's very interesting to watch the VX. A clear trading band has formed, with support at about 15 and resistance at about 22 to 23. The high volatility trend that started in July is still going strong as long as it stays in that range. But if that 15 area, the bottom of that range, was broken with more force, it would mean that the market is likely to be able to keep going up. This would also mean that a lower volatility cycle has started up again. Since the VXX is oversold near that support, you would expect to see some correction, which means it goes sideways and then bounces back up because it is oversold. After that, you could apply that to the S&P 500, since it has an opposite relationship with it, and expect the S&P to consolidate and pull back. It's just a matter of how huge that sound will be. Okay, Katie, let's move on to the next stock, the newest member of the Dow. Traders I talk to all have it and talk about it all the time. Since we were almost like CNBC Nvidia here, I have to talk about Nvidia. The chart is right here. The 100-day moving average is shown here as the purple line, and the 200-day moving average is shown as the gold line. You can see a spot of resistance right here. What does that tell you about this move and this stock? In this case, we say that Nvidia is trying resistance. The 141 level was firmly broken last week on a 9% rally. This means that we need to confirm a breakout this week in our work. So if Nvidia's stock closes above that level on Friday, it would confirm the rise, which is a good sign. The price goal for the controlled move from that breakout would be around 157. That may be too low in the long term, but it's more of a goal for the medium term. Tom Lee is our main act today. He's now here. He is, of course, the managing partner and head of study. He also writes for the site. It's great to see you again. Thank you again for helping us show our investing fans what to do on election night. It was great to have you. What are you going to make now? Now that you've had some time to think about what happened, you could say yesterday was happy. What now? First of all, Scott, thanks for having me on election night. It was historical, and I had a great time. I think the 3% move yesterday, which was the best move in the history of any rally after an election, should be honored because it really shows one of two things or both. One is that a lot of risk was taken out of that election, which wasn't normal. We missed election day by 2 weeks, which happens about 1/3 of the time. The second is that people who want deregulation, mergers, and a setting that is good for business could let their wild sides out. I think it's a very good move, and it means we could see a 5 to 10% gain by the end of the year. But at what point do you agree with Barry Bannister that the train could be leaving the stop and going straight to crazy town? But he's kind of right about the way the market works. This market peak won't happen because of a problem with P/E or because of a slowdown. I think it's very possible that in the next 6 months, the top will be because either all the firepower has been used up or people's expectations have become crazy. When it comes to markets, we can use either, right? We can look at margin debt, which has been flat for 4 months. This means that the market has been going up and most buyers have been lowering their risk, which is good for me because it means the market is going up. And studies of how people feel show that it's not very extreme. It was actually high and only went back to normal yesterday, so I don't think feeling is very strong. Oh my, it's funny that you went there because I was going to ask you about the VX. I mean, it's down 30% in a week, so it's pretty much a total loss, right? Last week, we were above 20. I think we were at 22 at one point. Now, we're barely above 15. Indeed, seeing the VX futures curve was very interesting. It was over 20 on election day and would stay that way until August of next year. It ought to be 15 or 16. For 9 or 10 months, the markets were pricing in chaos and doubt. It seems like a lot of risk is being taken again. People didn't get enough publicity yesterday and today, in my opinion. I mean, you thought we wouldn't know the election results for weeks. I think that was your starting point. So I think there's a lot of rethinking about what might happen in this market. Also, I'd like to talk about our new ETF. The Fundstrat Granny Shots US Large Cap ETF is the name of it. You think these would be a little easier to make than the Granny Shots, right? Yes, that is true. That's how you made it. We're going to talk about names, I hope. I believe this has been made. For the top 10, you have Tesla, Goldman, JPM, Johnson Controls, Caterpillar, Emerson, TransDigm, Eaton, Oracle, and Ingersoll. But how did you make that? The study model we use at Fundstrat is a lot like the one in the Granny Shots ETF. This is the core stock strategy that we've been using since 2019 and have done so for 6 years in a row. It looks at 7 market themes that we think are important and finds the stocks that are most linked to those themes. These themes could be AI, millennials, Fed easing, or improving PIs. Then, our Granny Shots are the stocks that show up most often across themes. The name Granny Shots comes from the way Hall of Famer Rick Barry shoots free throws. We remember that for sure, some of us do. The most valuable stock is Tesla, which is worth 3.5% of all stocks. Do you just want to talk about how that stock has changed this week, what it means to you, how you've built this, and where do you think it can go? As of 2019, Tesla has been showing up in our study product. This is because the company has a hidden asset in the form of its AI, intellectual property, and now, of course, its own infrastructure. But we think the company is worth more than it is because most people see it as a car company and look at its present earnings and margins. But we all know that there are a lot of new projects going on, whether they are about robotaxis or robots. Now, there's the political side, which you guys talked about very well, and I think it will only help Tesla.